Hello traders, and welcome to StockGoodies Chart School. Percent B quantifies a security's price relative to the upper and lower Bollinger Band. Let me load up this indicator here on this stock chart for ACAD here at stockcharts.com. And first of all, since it's related to the Bollinger Bands, let's go ahead and load them up. They're at the standard period of 20. You can adjust these higher or lower depending on your trading style. Then in the indicators box, click that and go to Bollinger percent B. It's also set at the same parameters as the Bollinger Bands, which it should be. So if you modify this one, you should make this the same. Click Update. Okay, there are 6 basic relationship levels. Here is the percent B set at 20,2. The Bollinger Bands also set at 20,2. Okay, percent B equals 1 when the price is at the upper Bollinger Band. So that would be right up here where it's at the upper Bollinger Band. Percent B equals 0 when the price is at the lower Bollinger Band. Okay, there's an example of one. This is an even better one. This is right at the 0 line. Okay, and it's right at the lower Bollinger Band. Percent B is above 1 when the candlesticks are above the upper Bollinger Band. At this point, it's a reading of 1.5. Also, here again, it's above the upper Bollinger Band, so it's above 1. Percent B is below 0 when the price is below the lower Bollinger Band. I don't see any instances of that on this chart, but I have other examples. Okay, percent B is above 50 when the price is above the middle Bollinger Band, which is this blue dotted line, which is the 20-day simple moving average on a daily chart. Percent B is below 50 when the price is below the middle Bollinger Band or the 20 SMA. Percent B can be used to identify overbought and oversold conditions. However, it's important to know when to look for overbought readings and when to look for oversold readings. As with most momentum oscillators, it's best to look for short-term oversold situations when the medium-term trend is up, and look for short-term overbought situations when the medium-term trend is down. In other words, you should be looking for opportunities in the direction of the bigger trend, such as a pullback within a bigger uptrend. Define the bigger trend before looking for overbought or oversold readings. Okay, so what does that mean? Look for opportunities within the trend. Okay, if you recall, the middle Bollinger Band here is the 20 simple moving average. And moving averages define the trend. You can also just look at the candlesticks and see that they are much higher. They're just going up. Okay, but what they're talking about is look for situations where it may be overbought right here. Okay, and it's above $5, so you can go short if you wanted to, but I wouldn't on this stock because it looks pretty strong. Okay, but anyway, it pops up above the upper Bollinger Band. If you recall the lesson on Bollinger Bands, within 3 days it will be back inside the upper Bollinger Band. Same thing here, it's above the upper Bollinger Band. It is very overbought with a reading well above 1. It is at 1.5 because it is above the upper Bollinger Band. 3 days later it's back inside. Same thing here, it's way above the upper Bollinger Band. The reading is almost 1.5. Okay, within 3 days, within the second day, it is closed back inside the upper Bollinger Band. But what they're talking about is looking for pullbacks. Okay, you're studying this particular company, you're doing your fundamental analysis, and you like their products or their future. Okay, so on a pop up above the upper Bollinger Band, it pulls back. Okay, and a good place to buy, generally speaking, is at or just below the lower Bollinger Band when percent B and other indicators like stochastics and Williams percent R say that the stock is oversold, which means it's going to bounce. So if you buy at the lower Bollinger Band, generally speaking, that's a safe place to buy. And in this case, the run was from 12 to about $20 just on that buy signal alone. Okay. Now, so what you're doing is you're buying, you're waiting for a pullback. This long consolidation that lasted at least 3 weeks hits the bottom Bollinger Band. It's oversold. It's time to buy. Now let's take a look at Bank of America, BAC, where it is below the lower Bollinger Band here, and the reading is now below zero. Same thing here. The reading is well below zero on this one. Okay, now the trend on this stock is basically up, but it's very volatile. It goes up and down a lot. Okay, very choppy action, some nice chart patterns in here. So let's start at the beginning. This is an inverse head and shoulders. Okay, it got very close to oversold at the lower Bollinger Band. Percent B was right at zero right here. It was at the lower Bollinger Band, so it bounced. Okay, this is actually a double bottom here that broke out. It's above the middle Bollinger Band. It's bullish. It reaches above the upper Bollinger Band and is very overbought. So it falls immediately to the lower where it hits the zero line and bounces from 11 to about 1250 immediately. Does a little pullback and breaks out again on huge volume to new highs, the highest highs on this entire portion of the chart. Then there's a couple of reversal candles here. Falls immediately through the middle Bollinger Band, which is bearish, and falls again to the lower Bollinger Band where the reading on percent B is very low. So it was time to buy here, but it got rejected at the middle Bollinger Band. It's bearish from here all the way down to here, where again it's another buy below the lower Bollinger Band right in this area. Nice bounce. This time it hits the upper and then pulls back and finds support at the middle, which is very bullish. And then huge volume comes in to send it to all new highs above this level of resistance right here. Okay, so this looks like a cup and handle right here. Here's the cup, here's the handle. The breakout above resistance is right there at about 1250, and it immediately runs $1. Okay, so it's staying above the middle Bollinger Band this whole time. Okay, then it has support again at the middle Bollinger Band and breaks out to new highs here above all of this resistance. Volume was okay on that move, but not convincing, so it pulls back straight through the middle Bollinger Band to the lower. Bounces, finds resistance twice at the middle, and then this is a bearish head and shoulder. Here's the head, here's the left shoulder, here's the right shoulder. It has two right shoulders, and when it breaks all support in this area, it falls below the lower Bollinger Band, forms a nice reversal candle. It's very oversold at below zero, so the buy was here. The run was from $12.50 to $15. Once it hit the middle Bollinger Band, it found resistance there for a couple of days, but then increasing volume picked it up, sent it out to new highs right here above all resistance, and that was one heck of a run. This is called riding the upper Bollinger Band, where it just pushes it up. It's not riding it, it's pushing it. Okay, so it gets very overbought here. Does a little pullback. I would expect, because this stock is so strong at this point, to find support at the middle Bollinger Band again. And as with all indicators, it's important to combine other forms of technical analysis like candlestick and chart pattern analysis, and also using like RSI and stochastics to confirm the readings that indeed Yahoo was below the lower Bollinger Band, below zero on percent B. That was the buy. It ran from 25 to about $30 just by buying below the lower Bollinger Band when it was very oversold. It was time to take profits when it was above the upper Bollinger Band on huge volume. And then a reversal candlestick showed up right here, a long-legged doji. So it pulls back to the middle to find support. But it was overbought right here on percent %B above 1.0. So generally speaking, it's time to buy when a stock is oversold here and here, and it's time to take profits when it's overbought there and there.